I want to bring in Raghee Horner from Simpler Trading Group. Raghee, it's good to have you back. Let's begin with inventories because yesterday on the close, the API reported a build of 6 million barrels. Today at 10:30 a.m. Eastern, we get the more closely watched EIA. In terms of demand concerns we've been hearing about, are inventories one of the places traders can look to determine the extent of the impact from the coronavirus on global demand?
It's great to be back, and what a awesome time to be talking about crude. It's actually a very interesting time in terms of why we see all these different knock-on effects. And right now, as you mentioned earlier, I love the recap. OPEC's coming out and telling us, I think, things that we already knew. The cut in the OPEC Q1 global demand probably baked into the cake. I think the really interesting thing is that V-top, you were showing charts earlier, Ben, that V-top, that January 8th sell-off, up until that point, crude was looking like it was cruising to higher highs, certainly making the Saudis happy and the Russians as well. I think today, one thing that I'll be looking out for any sound bites about is whether or not the OPEC Plus meeting, Russia's meeting today, whether or not they're going to be game for those production cuts. OPEC is looking for about a 600, actually, I'm looking at about a $60 to $80 OPEC Saudi target versus 40 for Russia. So the Russians really are in a better condition to see crude at 50 right now.
Well, we can see that in terms of the reluctance to participate and, well, go along with these proposed cuts. I saw recently the Russian energy minister, Alexander Novak, he said Russia is studying the market and needs to take more time. He basically said take more time to assess the situation and determine a balanced approach based on market interest. They seem to be very, again, as I mentioned, reluctant to participate or move forward with projected cuts.
You're right, and they don't have to. That's the great part to be Russia right now, with a $40 basically budget for them. $50 is no big deal. Saudis are really in big trouble in terms of that $80 that they need. But we'll see how that meeting goes today. And some of the knock-on effects that I'm interested in is how it's going to affect Canada, how it's going to affect Germany, this coronavirus crude oil connection. And then, also one very small bullish aspect to crude right now. I don't think it's going to be much, but you look at Libya right now at 15% their normal production. And, if we're going to see small stories maybe help put in that bottom, those are the kind of things that I'm looking at.
Yeah, or at the very least, that Libya story could help support prices some and slow the decline a little bit. Speaking of that decline, I'm looking at crude prices, which continue lower while we see the indices continue higher. The divergence has got to give at some point, Raghee. I guess it's a waiting game to see which way it goes. I mean, normally these two track each other very closely. This is a major divergence that's playing out.
Well, as I say, don't short the stock rocket right now, and that's really playing out. There was nothing that I heard from Jerome Powell that doesn't lead me to believe that the same mindset that they had back in July and August, when they very quietly put a V bottom in that balance sheet, started expanding that balance sheet again, there's no reason that I'm going to expect them to back away from continuing to juice this stock market. And as long as we're sorry.
Go ahead. I'm sorry. Finish your thought there. I thought you were. Go ahead.
No, you're fine. So I do continue to see the divergences, and coronavirus is going to continue to be a negative impact to crude. But I like that $50 level. I think there's a lot of psychological support in that area. Like you mentioned, some of the smaller impacts could start to contribute. And if Russia goes along, but no, I'm going to continue to look for those divergences in stocks, especially when it comes to the NASDAQ.
Yeah, we're going to continue to watch it as well. Raghee, a bit later on the show, we're going to be discussing the NASDAQ and a handful of the top-weighted companies that move the index and why it's key to stay dialed in on not only the futures, but also the individual stocks, the names, the individual companies. I'm wondering, with many of those NASDAQ names that make up the index, the tech-heavy index, like booking names like Expedia, Booking, and Trip.com, I mean, some of them are airline companies like American Airlines and shipping companies like JD.com. Is the NASDAQ potentially a place to look for signs of weakness that could ultimately trickle down to demand concerns that we were just talking about? Basically, can we look to individual names, these stocks and the index as a whole, to provide at least one piece of the energy's puzzles as well?
I'll say for now, probably not. And as long as we're seeing Microsoft, Amazon, even Facebook took a little bit of a knock when it was announced the FTC is going to be looking into big tech and small mergers. But I'm looking at that heavy, high concentrated weighted index. And yes, some of those other names are further down the list, lesser impact on the overall NASDAQ. So if I'm taking shorts or if I'm taking something contrary to the overall trend, it's going to be in individual stocks. And I'm going to focus on staying long the NASDAQ and then maybe cherry pick those names that might be susceptible to international travel. And then, crude, it goes right back to crude. You look at how the elasticity between international travel in and out of China and crude oil demand. So it's interesting how it's all going to be interwoven, but I'm still very bullish the NASDAQ.
Yeah, I'm oftentimes guilty of trying to tie too many loose ends together. You mentioned the $50 level in terms of crude. I'm wondering if we get down below that with conviction, with some follow through, are there levels down below that you'd be keeping an eye on then?
So I'll take a look at the volume that we see if and when we break down through 50. But I think you and I both know we can look at the squiggles all we want. I'll still use the charts. But at the end of the day, if Russia decides that they want to play along with the Saudis, we're going to see a very different crude oil market.
Yeah. Let's talk real quick about the strength in the U.S. dollar and how much you think that's been impacting crude. It's back up to near those, September double tops that we saw up around that 99.30 area, still holding below 99. But how big of a factor has this been as of recent?
I've just been waiting for Christine Lagarde. Now she's running the ECB to just Donkey Kong the euro. Now I bring up the euro because there's no bearish dollar analysis unless there's a bullish euro.
Noted.
So I look at it this way. There's no way that the ECB and Christine Lagarde can even discuss strengthening the euro. And that pretty much guarantees a strong dollar. And then take a look at the debt cycle right now with the U.S. dollar being the how we're denominating all debt globally. There's just so much U.S. dollar demand still. So between the euro and debt, I'm a dollar bull. I have been for some time.
Yeah, Lagarde had some comments yesterday which sent the euro below that 110 handle again into a new year low print. I'm going to be keeping a close eye to see if that provokes the dollar into the new highs for the year. We'll continue to watch. Raghee, that was a great breakdown. Thanks for joining us here on a Wednesday morning to talk energies. Traders, that's Raghee Horner from Simpler Trading Group, taking a look at crude oil with us.